If I knew what I knew now, I could have taken $250,000 in equity that I had in a duplex that I had held for 10 years. I could have 10x that equity in 10 years and created $120,000 a year in passive income, but I didn't.
Let's actually dig into that. I know you asked us, but I'm more curious, Travis. You said, "Hey, I had $250,000 in equity. If I knew what I knew, if I knew then what I know now, I could have put that into something and created, what do you say, 10,000 a month in revenue."
I
Like,
could have
how?
bought mutual funds. Meh.
I'm more curious to how would you have done that? Because, 250,000
Dude, I asked
equity.
you.
I'm
I have a gun to your head, remember?
$250,000. I would put, if I could have access to that equity, whether it was a cash out refi or I sold the property and I accessed that $250,000, I would go put that down on a larger property. I would try to put that down, maybe on multiple properties, but at least put that down on something. I mean, this is what we look at now as return on equity, right? You start building up a real estate portfolio. Even if it's cash flow positive, it's slow. Maybe you're cash flowing $500 a month, $1,000 a month, but you're sitting on $250,000 of equity. Or there's a lot of people listening to our show that's sitting on millions of dollars of real estate. They've purchased a few rentals, they're chugging along, but they have that equity. You can tap that
Well, I mean, I
equity,
can tell you what I did.
cash out refi. I told you to tell us what you did, but you then said you wanted to know what we would do. So, make up your fucking mind, or you're going to have a gun to your head. I mean, shit. So, you take that 250, you put it down on the property. You put it down on a property, whether it's conventional seller financing, some combination, and you 10x your cash flow, right? Like, if you're cash flowing $1,000 a month or $500 a month, and you have significant equity, and you can go put that down on a larger property for a larger true net gain and true net cash flow gain, then why not? I would trade $1,000 a month in cash flow for $10,000 a month every single day. And a lot of times it's just as simple as trading up.
Well, I think the challenge is I think the question was, how do you 10x the equity and create $10,000 a month? Because there's a lot of people that are sitting on this type of equity or some cash, and they're like, how do I become a multimillionaire and retire? Well, I mean, knowing what I know now, on this particular duplex, I actually did. I went in with Mitch. We bought a mobile home park. I was able to 3 or 4x my cash flow immediately through a 1031 exchange. But it's been a slower game because it's taken me a while to learn this. What I know now, you take like you said, Gabe, you take your $250,000, maybe sell the duplex, do a 1031 tax deferred exchange, maybe sell it, whatever. But regardless, maybe take a line of credit against the duplex, whatever, access the 250, put it down on $1 million apartment building. 25% down or $1 million mobile home park is actually what we did. We did about a $250,000 down payment on a $1 million mobile home park. But you buy a mobile home park that's under market rents or there's inflated expenses, whatever the case is, and that you can get the value of that mobile home park up by $1 million in 12 months. Dude, we do this all the time. All three of us do this. We just closed on 2 parks. One park's going to be up $1 million in value. The other is going to be up a couple $1 million in a year or two by, there's some utility repairs, there's build back utilities, raising some rents, fixing expenses, improving the communities, being responsible about it. But either way, you take the 250, you put it down on $1 million asset, you force appreciate that asset. If you don't know what force appreciation is, go get our book. You then take that $1 million piece of property, and after a year, it's worth $2 million. Right? So now it's worth $2 million and you can refinance that. Or maybe after 2 years, it's worth $2.5 million. Those are actually real numbers. And then you go refinance it and you access several $100,000 back out, way more than the $250,000 you put in. Hold the asset, continue to grow it and force appreciate it over time. That asset's going to continue to grow, growing equity. And then you buy another asset for $1 million, or maybe now you go buy a 2 or a 3 or a $4 million asset, put $1 million down. Now you're force appreciating that initial $1 million park is now force appreciating to 2.5 to 3 million. Now you've got a $4 million asset that's force appreciating to 5-6 million. Like, these are real numbers, and you're using leverage, you're using force appreciation, you're using commercial assets, not hope appreciation. And we have people in our elite mastermind that's doing this shit all the time, and we've done it. So, and people think 3 years, no way. Absolutely. Absolutely. Yeah.
Well, I think a lot of people look at real estate investing in the beginning as like you just buy something and real estate will go up. So they buy a single family home or a duplex or something small usually, and real estate has done well over the last couple of years. So then they look at their portfolio and they go, okay, I got $250,000 in equity, or maybe they sell and they have $250,000 in cash. But for me, that's great. And that's a foundation, but it's not like you went out and grew that on purpose. When you move into the commercial side, you use financial engineering to purposely re-engineer or reverse engineer your own wealth. And so just like you said, you can take that 250,000, which is a lot of money, by the way. Congrats if you've already built that. You can take that $250,000 and go in and out of deals. A lot of people miss that. They just think I'm going to go buy a duplex and hold it for 30 years. Okay. With commercial, we go in and out of deals, and that same 250 can basically hopscotch multiple deals, creating value the entire way. And you do that through force appreciation, making the property worth more, refinancing, pulling that out tax-free, and then going into the next deal. So for me, it's like, and we talk about, I have calls a lot with these folks who want to join our mastermind. And I'm always talking about like, well, what's the velocity of your capital? If it's sitting in an asset too long, it starts to get stale. It starts to not work hard for you. But if we can get that to move into various assets, you can go build an impactful castle. So for me, I'm going to reverse engineer this thing. First of all, I'm going to understand commercial properties, how to underwrite them, how they're valued, how I can go negotiate awesome deals and structure awesome deals all the way from debt to price to all the terms. Then I'm going to go force appreciate as fast as I can. Then I'm going to pull out tax-free money. I'm going to go do it again. And this is what we do over and over again in our business. Travis and I and Gabe does the same thing. We go and we play this game, and it allows us to go into multiple assets and grow something substantially bigger than if we just said, hey, I'm going to go buy a duplex and see what happens.
Hey guys, if you like what you're hearing on the 0 to 100 podcast, come join the 0 to 100 Elite Mastermind. We have a very simple goal for you. That's replace your day job, make $120,000 a year plus in cash flow, real estate, and become a millionaire. That's it. If you like that, if that's you, click the link below, and we'll see you on the 0 to 100 Elite Mastermind.
There's also this relationship between cash flow and equity that I think people forget to talk about. And it also makes me think of the daisy chain strategy that we talk about in the book, right? And I've used this example before where I bought a single family home. Actually, my very first property, I house hacked it, rented out 2 of the rooms, lived less than I could anywhere else. But then at some point in that property, I lived in it for a year and moved out. I think the first year it was like $200 a month of cash flow, right? So that's very little, but it allowed me to keep the property. But again, $200 a month of cash flow on a single family home, you're one CapEx expense away from that property not cash flowing. At some point down the road, all of a sudden there was equity. The equity outpaced the cash flow. Well, I eventually sold that property, and I don't remember the exact number. It was somewhere between $200,000 and $250,000. So very relevant to the conversation here.
When did you have that 250K? So you said your house hack, because you're the type of guy that would want to talk to us probably when you were at that juncture, right? You're trying to figure out how to scale that. Like, how long did it take?
It was actually quite a while. I bought that property in, 2005. I didn't sell that property until like 2019. So I had owned it a long time, and I had purchased a bunch of property, along the way. But that particular property had increased in value, say $200,000. But so had these other properties. But as the years went on, it's like a little bit more cash flow, a little bit more cash flow. But then there was like, what could I do with that equity? So $200 a month of cash flow, even over the years, on a single family home, you're talking $500 a month of cash flow, $600. Like it's a slow moving train. But now I have access to $250,000. I ended up selling that. I put that down on a mobile home park. I've shared this scenario or this story many times. I bought a mobile home park for $1.3 million, put that money down, and now my cash flow went from hundreds a month to thousands of dollars a month. But then when interest rates dropped, I refied that property, pulled out about $800,000 and put that down on a large triple net commercial property that cash flowed $150,000 a year, right? So it's $200 a month to $150,000 a year by tap. Yeah.
Rewind though. Think about this. So you took several years, a decade or whatever, longer than a decade. I can do
longer
that.
than a decade.
14 years to create $250,000 in equity in a single family house. Kudos to you. You did it, right? And I know you did a bunch of other shit along the way. So you put that 250 down on your $1 million mobile home park, your 1.1 or $1.2 million. How long did it take that mobile home park now to grow $1 million up or $2 million or whatever the valuation delta.
Yeah, I bought that park for 1.3. Yeah, I think I actually ended up putting less than the 200 down. It was I don't remember exactly the numbers, but I bought the park for 1.3. I increased the revenue, I decreased the expenses, and I bought that park for 1.3. It appraised out at 2.775 in 2 years. In 2 years.
2 years. That's the point I'm making. It took you 14 years to create 250 in a single family house. It took you 2 or 3 years to create what, a couple $1 million in equity or $1.7 million in, like, plus the 250. That's the exact example we're talking about because you're buying larger properties that you can force appreciate. Sorry,
Well, then,
I just wanted to rewind.
then it got better. And then it got better. I cashed out, refied it, and put that money down on a large triple net property where I negotiated a 7-year lease, right, with rent bumps. So now there's millions of dollars in equity that was also created over a couple year period because I took the cash from the one and put it on a larger property that had even more cash flow. And as those rents increased, that property also became more and more valuable in a short period of time.
Daisy chaining, man. We talk about this in the book, and I freaking love this. This is like the game we play. This is what our elite mastermind guests or members are doing, not guests, members. And I think like people hit this ceiling. I Mitch, you and I are talking about this the other day. People hit this ceiling. They're like, dude, it took me like 10 years to create this like 250, 300, whatever that number is, $1,000 in equity. But they're sort of like stuck at that point. And there's this whole world above the clouds that people don't understand and don't realize when it comes to commercial assets and getting in and out of properties like.
Well, I talk to folks all the time, and for me, I describe it as you built the foundation and you're just before the curve. So somebody who's built $250,000 in equity, they've got a couple of houses or smaller properties, they're just before the curve. Now, as you start going up the curve, there's this wall or this ceiling, and you got to break through that ceiling. And what does that ceiling consist of? It consists of what you know, who you know, your underwriting skills. There's some tactics there, right? But it's also your network. I had that ceiling for me. It was 13 years before I bought commercial. It didn't need to be. I could have bought commercial in year one, but I never got through that ceiling. I didn't build the right network. I wasn't around the right people. I wasn't learning underwriting on larger properties. I didn't know how to talk to brokers and sellers and find deals and negotiate. I didn't build those skills, and therefore it took me 13 years. Now we have people in our mastermind. By the way, I love talking about our mastermind because it's like so relevant. We have people that come in and after a year go buy 50 units. Right? They took my 13 years, they compressed it to 1 year because they have the right people, the right context, the right education, the right network. They have a board of directors in real estate scale, literally. So like to me, that wall, that ceiling right there before scale, that's what it consists of. And so many real estate investors think, hey, I'm going to go solo in this thing. I don't need to build a network. I know what I'm doing. Okay, great. But your results are going to reflect that. And they did for me. It took me 13 years. I had 5 units. Then in the next 4 years, I was partner in about 400. And today I think we're around 700. That was like within 4 or 5 years versus 13 years, I got 5. So like, if you're listening to this podcast, ask what results do you want and then reverse engineer it. If you want to break through that curve, you've got to go get those things. You got to get the network. You've got to get the education, the mentors around you, the people to support you. You got to get on the right boat.